Hello everyone. So in this video lesson, we're going to do things a little bit different. Not going to spend as much time talking about the overall market because basically, I don't know how many video lessons, but the last 5 or 6 video lessons has continued with the narrative that the market has more than likely bottomed, and I just want to get long any pullbacks in my long-term accounts. That being said, the more I want to pull back, the more I'm thinking it's quite possible we never get a pullback and we just keep ramping higher based on data and evidence that I've accumulated since my very first day of trading. So the overall market, a lot of bearishness is still out there. I'm going to remind everybody, the market is forward looking. Anything and everything that you are seeing today in the news cycle has been known by the overall market for at least 6 months. This is why the IWM topped out in February of 2021, and small cap growth stocks have been selling off since February of 2021. Not February 2022, February 2021. The big caps, the leaders, were late to the sell-off, but this sell-off has been happening for a very long time. We are very late into the cycle of this sell-off. And because my game plan in the long-term portfolio was to do a big 50% of the remaining cash on hand load at 350, I should have known that we weren't going to get it, because that's the market. It very rarely gives you what you want, and it definitely did not give me what I want. The good news is that we started into the long-term portfolios at SPY 400. We increased size at 380. That's where we were going to do our big load at 350. It did not happen. We bounced. As we bounced here, I already knew, based on what I was seeing in the charts, based on my ratio charts and all the positive divergences that I have discussed in the previous video lessons, that the odds are I might not get my SPY 350. I better start looking for SPY 360. Following these 2 days here, and then the rally started again, I was like, oh, it doesn't look like I'm going to get SPY 360. I might need to start operations at SPY 370. And that's why on these 2 sessions here, the PPI and CPI sessions, you will see under the long-term portfolio tab that I did small piecemeal adds, about 10% of the capital in all my long-term accounts. I've recently bought a couple more recently, and so far those buys have been excellent timing-wise. However, I'm still looking for that pullback. And I just don't know if we're going to get it, guys. I really don't. I really don't. One of the reasons why is I want you guys to look at this bottom technical indicator. This is the accumulation distribution line. This is when the high was set in January. This is what the market has done. What has the accumulation distribution line done in the SPY since that top? I'm going to let you guys know. 2000 and 2007 start of the bear markets that turned into real secular bear markets, that accumulation distribution line didn't look like that. Do you know when it did look like that? Look at this sell-off, the COVID sell-off, January into the March lows. Do you notice how when we sell off here on this leg down, the accumulation distribution line doesn't confirm, doesn't sell off? And the next thing you know, we're rallying back up to near new highs. Then we hit new highs here, and we're below the old highs, but we take off. We have the same setup now with the SPY. If you look at the QQQ, accumulation distribution lines, what is that? That's a new all-time high, well ahead of price. In case you guys don't know what the accumulation distribution line is, it takes into account the price move and all of the volume based off the open to the close. It does not include the gapping overnight, the gap downs. On balance volume does. Accumulation distribution shows you what the professional money managers intraday are doing. So QQQ, accumulation distribution line, all-time highs. SPY, accumulation distribution line, all-time highs. The DIA, accumulation distribution lines, it is actually leading all the other indices, hit new all-time highs a couple of weeks ago. The IWM, wow, that's impressive. Wow, I did not realize this even. As I make this video lesson, I did not know it did this on Friday. Accumulation distribution line for the IWM, it's at a brand new, as of Friday, all-time high. Wall Street is accumulating stock here. I would still love to do that 50% load in the long-term portfolio, but I don't know if I'm going to get my pullback at all to the levels I want. My main level, where this anchored VWAP is, which happens to line up with the 50 Fibonacci retracement level, is at 390. If I can get SPY to pull at all and close at 390, 50% of the remaining cash in all these long-term portfolios will be put to work. If we get SPY 350 by chance, I'm hoping that actually by making this video lesson, the market will do the opposite of what reality tells me it's going to do. So I'm kind of like trying to reverse engineer a market sell-off, which I know is not logical or rational, but hopefully. But if we do get SPY 350, I'll load up another 50%. If we get SPY 320, I'll buy more, SPY 300. And if we ever get SPY 250, as per the original plan when this sell-off started, all in. But it's not going to happen, guys. It's just not going to happen. And so the accumulation distribution line is your tell. However, what threw me off and why I believe that we have bottomed is sentiment got me in a weird way. The VIX didn't tell me that we bottomed. It's always told me that we bottomed before. The equity put call ratio didn't tell me that we bottomed. It's always told me that we bottomed before. There was zero equity outflow during the sell-off. I've never seen a market sell-off where after a huge ramp of inflows throughout 2021, you don't at least purge 33% of it, much less not purge any of it. So all of that got me at the lows. So what sentiment readings am I looking at that tells me, oh, we've definitely bottomed? Well, the CNBC sentiment survey came out a little bit after the lows in June, and it showed that 59% of the participants were bearish. In 2008, at the lows, when you were only 48 hours away from going to any ATM in the United States of America and being unable to pull out money from an ATM, it was at 56%. So technically, the crowd in the CNBC survey has never been this bearish. It's kind of funny because we're still above the 200 weekly moving average on the SPY for me. Then there was the Bank of America bear bull ratio chart survey. Or yeah, it's a ratio chart. It's an indicator. It measures a ton of indicators. That hit 0.0 at the June lows. The Bank of America bullish bearish gauge can't go any lower. That's it. It's bottomed out. 0.0. It hit 0.0 at the June lows. We haven't looked back since. And then the AAII survey, bulls bear ratio, was at levels not seen since 2008 and early 1990s. Only 2 previous times ever has the AAII bear bull survey been that bearish. Now you're getting your bounce. Along with this bounce, what people don't realize is that my charts are the most bullish that they have looked since 2003. I have never seen this many stocks that basically look like coin, look like CVNA, look like Fubo off the lows, along with stocks like DVAX, breaking out CLFD, ATI, stocks near the highs. I mean, just look at all these. Look at all these stocks at new all-time highs. ENPH, WMS. So I haven't really seen, these are all new leaders, by the way, stocks that have looked like this that are near the highs and stocks that look like they do near the lows since 2003. There is one difference. In 2003, there were not algorithms. It was all real traders. In 2003, there were not dark pools to hide the big accumulative volume that now shows up as late prints, which do not show up on the daily charts. There are no U-shaped bases. They all now look like this. So this is the problem. So I can't chase this market higher. But give me a pullback, give me a consolidation, and I want to get long. I'll also remind everybody, there are breadth thrust readings in so many metrics I follow. S&P 500 stocks versus their 100-day simple moving average. S&P 500 stocks versus their 50 SMA, 20 SMA. We've gone from extreme low levels to extreme high levels that have only been seen. And this is multiple. Shalvaco Capital's video this weekend, I believe they run through 40 plus breadth thrust charts. These are the years that these have happened. 2002, 2003, 2008, 2018, 2020. All major lows. You can argue all you want against the weight of the evidence. That's not my job. I don't do that. So, the most bullish looking charts on an end-of-day basis that I've seen since 2003, extremely bearish sentiment via multiple sentiment surveys, breadth thrust everywhere, and then let's not forget, what is the one thing that I don't think anybody thinks can happen? Everybody thinks that we're going to roll over and sell off, especially retail. They're clueless. I love you guys, but if you're listening to the news or watching the news, you're late. That's all I got to say. You're late. Just like you were in 2021 when I was making YouTube video lessons all year long, warning about bifurcation, that something looked funny here and that I don't trust this uptrend. And in late 2021, really complaining that only 5 stocks is holding up the entire market. This wasn't my first rodeo. I used to write for realmoney.com before the 2008 crash. I complained about the same thing in 2007. 5 stocks are holding up the market, and I had parabolic charts then everywhere. Didn't have them this time around. But the one thing that I don't think anybody is actually thinking that could happen by the end of the year is what I think will probably be the situation that happens, which I don't think anybody's ready for. New all-time highs before the end of the year. Do I honestly think it's going to happen? No. I think that we've reached peak inflation, peak interest rates, also at the same time, peak jobs. Unemployment rate fell on Friday. Does that sound like a recession to you guys? Does it? Because I'll tell you, it's not. It's a technical recession, and that's it based on GDP numbers. That's it. There is no recession. This is one of the strongest economies that we've ever had. Tom Lee, who has gotten every twist and turn of this market right since the 2008 bottom, really the 2009 bottom, he thinks that we're going to see all-time highs by the end of the year. Wouldn't shock me at all. In this video lesson, or to send us out, I'm going to review 4 stocks that since I went long are hitting new highs basically after Friday's session. And then I actually do have a swing trade idea for everyone that will end the video lesson on. But first I want to show everybody GRBK. So when GRBK, this signal, I call this a volume truncation signal. It's when the volume bar of the day of the quote-quote signal truncates all the previous volume bars, along with the max green bot move, hammer candle, right off strong recent price support and the 200 SMA. I risked a full 1R from my entry level, which is always 1 cent above the high of the day, to the low of the day. And by doing just a 1R risk on this trade, I was able to get 30% of my account capital into this name. Now, back in the day, I would get these from 1998 to 2008. In good markets, you'd get one of these signals at least once a week. You'd at least get one every 2 weeks. You would definitely get one a month. You would definitely get at least 5 to 10 a year, minimum. And they would all do exactly what GRBK did. So every time you got a signal like this, if I had 20% of the capital in the account, 20% would go in. If I had 80% capital of the account, 80% would go in. Because the win-loss ratio was also 70% wins, 30% losers. So you just cut your losses really quick on the losers. But GRBK is what used to happen all the time. Doesn't happen anymore. And we don't get great signals like that. But we still get some pretty solid signals. And I was starting to get signals in April. And from April to June, they weren't doing too well. Position size accordingly. Small size trades. Sized up lately, but some have been working. And I just want to review a few of those. So DRCT, on this day here, you have a nice hammer candle bar over a previous candle bar right off the 50 SMA. You had a volume truncation day. Now, the best signals, whenever you get a hammer signal like this, are going to be above the low of a volume truncation day. I'll show you a perfect example, CEIX. CEIX, beautiful volume truncation day. Oh, I'm way too early. Beautiful volume truncation day right here. Pulls back. We get this hammer signal. I don't get long because I perceive it to be too far away from the 50 SMA. However, if I would have been wise, I would have realized it's holding this low. I flagged it for everybody at Big Way Trading. Anyone could have taken this trade. The trade idea is good, over 393. Cut your loss here. If it doesn't gap up, you can get long at the market, cut your loss with the close, or move below 347. The next day, and then the next day. And in 2 days, you get an 81% gain. So that's the best kind of setup from a signal like this. But DRCT didn't quite have that setup, but it still had the hammer over hammer. Still had the max green balance of power at the bottom. Nice little move. Now, in case you guys don't know how it works with me, once we get this move up here, you got to take some profits off the table. Heck, I wish intraday I would have taken some off at 271, but I'm not day trading this name. It's a swing trade. So after this day, you got to have a stop here, a trailing stop here, and a trailing stop here. And you got to sell 20 to 25% at the market after this day. Then following this session, I add a stop below this level. Then after this day, on Friday, I'll add a stop. I have already added a stop here. And I'm going to take a little bit off at the market in the morning on Monday. HCI, this was a great initial signal. But this is what I'm going to show you is a problem lately. Beautiful signal. Too big of a tail to be a great signal. But it didn't. It started to work immediately, but because of the overall market, it didn't work like they should. That being said, notice that we hold this low. We get that hammer candle off the recent lows. What did HCI do since that low? Nothing but straight up 16% gain from that buyback signal. The white arrows, by the way, on the charts cannot be manipulated. I add them to the list of stocks I am long on Telechart, and it populates this white arrow. You can't change it. Once I get long something, so that's the signal date, candle over candle, heavier above average volume, pocket pivot point signal, max green bop, get long above the high of the day, I get filled at 199, arrow goes on the chart. But MKFG is another one stock that just keeps drifting higher. Took some profits off after this day. Why? It's extending. Take some profits. It's extending. Take some profits. And yes, I have stops trailed below each of these lows all the way down to this low to ensure that I leave the entire trade with gains. CECE will be the last one. So this is a perfect example of the volume truncation day. Volume truncation, max green bop. But what makes this signal great is that it already had a previous volume truncation session. It's done nothing but uptrend with green bop and positive bop. Then you get this day. Then I get the hammer off the uptrending 50 SMA while holding the volume truncation lows. Any surprise that CECE, oh, excuse me. Should have gone long on this day. I did not go long on this day. Flagged it for everyone here. Started to work. Regretted not taking the signal there, but then I got that flag pattern. And this one technically is better. You've got a bull flag forming off the 50 through the 200. Trade idea was given out to everyone before I could take the trade. 610. You get long at 610. Any surprise, CECE has basically been a perfect trade? I'm not. So keep that in mind. This is the new long idea on the quality side, CEIX. CEIX is a candle over candle above an uptrending 50-day SMA. I've received back-to-back pocket pivot point signals on above average volume, and I've got BOP steadily climbing higher. Is this a great signal? No. Is it a good signal? Yes. CEIX is in a leading industry group. It's a leading stock in a leading industry group. Has 5% short float. They just released earnings. They beat on the top and bottom line. It's a pretty good pattern. But to take a trade like this, that isn't perfect. I do like that it's off this support level, but this signal is part of this move overall. So technically, if you wanted to play this consolidation pattern, you need to risk to here. That's way too far away from me. Now, if you really want to size in and you expect it to work correctly immediately, you risk to here. I'm kind of split in the middle. I'm going to risk to here on my position. You could also do a semi-uptrend line. Not a big fan of it. And it closed below the uptrend line. You can just get out. But my game plan for me, now if it doesn't gap up, you can always get long at the market. You just need to make sure you stop out if it moves below this low. Or if you risk to this low, you got to make sure you stop out as soon as it trades 1 penny below that low. But 63.01 will be my trigger. If it gaps up, trade is paused until it's back below 63. Then I'll call it on as long as the pullback's on low volume. If it's on heavier volume, I need to wait for the day to close. So 63.01. And one final thing I want to show you about CEIX. Daily chart on Telechart version 20. Look at the accumulation distribution line on the daily. New all-time highs confirming the stock's move. And it went to new all-time highs well before the stock did. See how the stock's extending further? Think about our analysis on the market, okay? Also, Chaikin money flow is positive. Green is good. I always like green on the daily. When we get over to the weekly, the accumulation distribution line, new all-time highs, Chaikin money flow is green. So we're good to go here. Doesn't mean it will work. So once again, if I get long here, if it trades below this level, 52.67, once it hits 52.66, I will be stopped out of the entire position. All right, everyone. Have a wonderful rest of your weekend. If you're a member, I'll see you in the chat room Monday morning.